So good day everyone, my name is Rowella Borromeo Ontoy from BTL Ed 2A. So now I will going to share a short description of corporation and how corporation really works in business. So we're going to start. So what is corporation? So corporation is a form of business organizations that is recognized by the law as having all the legal rights of an individual. They have the right to buy and sell property, enter into legal contracts, and sue and to be sued. In 2006, corporations were 19.9% of business organizations, but were responsible for 88.8% of all sales. So, corporation is a legal created by individuals, stakeholders, or shareholders. So, they have the purpose to operate for the profit. So, it's a form of business operation that declares the business as a separate legal entity guided by a group of officers known as the Board of Directors. So next, how corporation works. So corporation minimizes the responsibility of their shareholders. They are properly constituted, capitalized, and administered, this includes suitable annual meetings of shareholders and directors. So the personal assets of the stakeholders are not at risk due to corporate liabilities. So corporations file Form 1120 while the Internal Revenue Services and are responsible for their own taxes. So, there are some benefits of forming a corporation. So, the first one is the ability to raise capital, limited liability, continued life, and separation of ownership. So, first I will going to explain what is ability to raise capital. So, what is the ability to raise capital? So, it is a major advantages of corporation is the ability to sell stock and generate capital, or money. And if the corporation needs money or money for growth and expansions or other purposes, the company can sell additional shares of stock to raise the necessary funds. So, if a large amount of capital is needed, needed to start a business, then the company may begin as a closely held corporation rather than as a partnership. So, examples of this kind of corporation might include an automobile dealership, a restaurant, and an amusement park. So, the second one was the limited liability. So, what is limited liability? So, it's a great advantages to the stockholders or owners of a corporation is that they have limited liability. So, this means that if the corporation has debts or financial problems, the owners may lose only the amount of their investment or the price they paid for their stock. So, consider the following example. So, you can own $20,000 worth of stock in a family-fund restaurant. So, the restaurant is not successful and goes out of the business while owing $150,000. So, to its creditors. So, as a stockholders, you can lose only $20,000. So, or the amount of your investment. Then, to help repay these debts, you are not personally responsible for any debts beyond that amount. So, unlike a sole proprietorship or a general partnership, a corporation leaves your personal assets protected. You are not legally responsible for all debts owed by the corporation. So, that is how limited liability works. So the third one was the continued life. So, what is continued life? Or how continued life works? So, when a sole proprietor retires, dies, or sells his or her business to someone else, the business ceases to exist. So, each time partners enter or leave a partnership, a new partnership must be created. So, in each corporation, however, a change of owners does not end the legal operation of the business. So, stockholders may enter or leave at any time without affecting the existence of the corporation. So, its legal status as a business continued indefinitely. So, the fourth one was the separation of ownership and management. So, the owners do not run the business in most publicly held corporations. So, instead, they elect a board of directors. So, they have the board of directors. So, it's a group of individuals who are responsible for overseeing the general affairs of the corporation. Then, the corporate officers and professional managers are hired to make day-to-day decisions in running the business. Then, other specialists such as lawyers and accountants advise the professional managers by separating management from ownership. So, advise the professional managers by separating the management from ownership. So, it is how it works then. The corporation can take advantage of the skills, knowledge, and experience of various individuals ensure that the business will run successfully. So, those are the benefits of forming a corporation. And now I will going to discuss the negative or the disadvantages of forming a. So, disadvantages of forming a corporation was the complex and expensive setup, slow decision-making process, and taxes. So, let me explain first the complex and expensive setup. So, you have learned the sole proprietorship and partnership are fairly easy to set up. So, in contrast, a great deal of work is required to create a corporation. Then you must complete many forms, file reports, and adhere to many laws and regulations. Then, as a result of the great amount of work in organizations required, forming a corporation costs a large amount of money. So, some costs of creating a corporation include legal fees, licensing costs, filing fees, costs of issuing stock certificates, and administrative costs. And the second one was the slow decision-making process. So, what is slow decision-making process? So, it is a major disadvantage of the corporation in the slowness of decision-making. The process in sole proprietorship and partnerships, only a few people determine how the business is run. So, as a result, decisions may be made quickly. However, in corporations, especially large ones, that many different people study the issues and discuss and debate them before making a decision. Then the process can take even more time if disagreements occur. Thus, corporations may not respond quickly to issue or situations that affect the business. So, the last one was the taxes. Then, what are taxes? So, another major disadvantages of a corporation concerns the taxes. So, because a corporation is separately legal entity, it must pay state and federal income taxes on its profits, dividends, the stockholders receive are then taxed again. So it continues paying the taxes. So, here are some examples of corporations built in the Philippines. So, the first one was the San Miguel Corporation, the second one was the Robinsons, the third one was the Jollibee, and the fourth one was the Sun Life. So, those are some examples of corporations here in the Philippines. So, that's end my discussion about the corporation and how corporation really works. And so, once again, my name is Ruela Borromeo Ontoy from Detail at 2A Reporting. Thank you!